Another Market Matters weekly video update. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined again by James Gerrish. James, welcome.
Thanks, Nick.
James, I thought we'd kick things off today with the index, currently at 5,800. Called that really well in the reports recently. Now, I guess for our subscribers out there, what's the path from here? Are we going to 6,000 short term, or do we go lower before going higher again? And this correction we're talking of, when should we potentially expect that?
Yeah, I think we go lower before we go higher. So 5,800 is a pretty key level in the market. Up today, and it's around that 5,800 level. So, short-term caution. We've got our sellers hat on rather than our buyers. We're sort of in that no man's land. So we're looking to, take profits on a few things, but we're looking for lower levels to buy the index as a whole. So 6,000 is likely to happen, but not just yet.
Okay. And CBA reported this morning, one of our larger holdings in the portfolio. We did average it around that sort of 82 mark recently. Had a brief glance at that and noticed that net profit was up. Obviously paying a decent dividend. What are your thoughts on that result? And where to here for CBA?
Yeah, it was a better result than the market anticipated. Earnings were up by, or above consensus by about 2%. There was some concern around the net interest margin, the margins they're getting. That came in line with consensus, 2.11. The divvy was a tad ahead. It was 1.99, 1.98 expected, so 1 cent on a 2 cent dividend, nothing. But all in all, it was a pretty good result from CBA. They've increased investor loan rates as well, which obviously has a positive impact on margins. So, no, a good result from CBA, and that's why the market's up 50 points as we come down here, Nick.
Do we have a price target on CBA shorter term? Do you think it can drift up to the high 80s?
Yeah, so on our portfolios, what we've done today has been selling call options out to May on CBA, $86 calls. You get some premium in the door, and you're capping the upside around $86, but X the upcoming dividend, that'll take another $2 off the share price. That seems like a sensible trade to us. So, you've got to trade the ranges in CBA. So the top of the range is 86, 87. The bottom of the range now seems around 80.
Okay, fantastic. And you just touched on options there before, talking about CBA and calls. Now, we did put one on yesterday on Fortescue. Now, sold a couple of positions on that. Now, if you look at the Fortescue chart, it looks like a bit of a double top around that $7 mark. It's run really hard with the iron ore price recently. We're anticipating a move back to $6. Had a few questions about that. Obviously, we'll probably go more into depth in time on this stuff, but just wanted you to briefly explain that position and what we're expecting with Fortescue at this point in time.
So we bought one leg and sold one leg, so it's a bearish option position. So bought a $7 put expiring in May, and sold a $5.75. So basically it limits our upside to $5.75. So you get the maximum profit in this is 75 cents. We've outlaid 50 cents to buy the position. So, importantly, your maximum loss is 50 cents as well. So if it all goes pear-shaped, you can only lose the amount that you put into the position. So, we're short-term negative Fortescue. It's traded up above $7. False break up yesterday. It's around $6.95 today. It did get sold off fairly well yesterday afternoon, which looked good for our position. But targeting a move back down to $6. So if you've got stock, we'd be using the opportunity to sell stock here. And for those that didn't, we've taken a short-term, aggressive, high-risk option position out there.
And by short term, get a lot of questions around what is our short term, medium term, long term. Short term, do we mean next month, 30 days with the Fortescue position?
Months. So we bought May, so we've still got, we wanted to encapsulate that period of April, May, which is traditionally weak for equities. That's why we've gone out to May. So you could have tightened up the time frame, and that would have made it even higher risk because your views have got to play out in a shorter amount of time. So we've gone out to May to sort of offset some of that risk in the position. Okay,
and lastly, just wanted to talk about QBE. One of our better performing positions, picked that up in the mid-10s. Some people even picked that up below 10 on the day that Trump got in or won the election. Now, currently around that $13 mark, had a really good run. There's a lot of talk around takeover now. Just wanted to, pick your brain on that. Wonder what you're seeing there. Do you think there's any merit to this takeover bid? And even if not, is QBE a buy here? What are we anticipating?
Yeah, I think it's a buy here. I think where there's smoke, there's usually fire. So if you think about Allianz as the big German insurer that's being spoken about as the potential acquirer of QBE, they're a $100 billion market cap. QBE is about $17 billion market cap. Allianz has got a war chest of about $12 billion they're looking to spend. I think on a broader perspective, QBE is at the bottom of the cycle. There's all these things that have been against it for a number of years. Those things are starting to turn. We saw it in the Suncorp result this week, where the top line result was a bit messy, but the underlying trend, particularly in general insurance, was positive. You think of higher interest rates. You think of commercial premiums starting to rise. You think of if the Aussie dollar goes lower, that's going to be supportive of QBE. So Allianz, I can see why they're doing it, and I can see equally why QBE would defend against a takeover. They're at the bottom of the cycle. From a longer term point of view, QBE is going to do better over time. So we like the holding, but when you typically get these talk of a takeover and the defence team appointed, which QBE have done, there's obviously some, there's things happening there. So we think it's firmly in play. So we're holding our position in the portfolio, and we mentioned this morning that we look to take an option position on the upside to potentially expand our exposure on the upside. So we still like QBE here, Nick.
Yeah, okay. And just lastly, briefly on takeover bids, usually, they're around a 20 to 30% premium. So, if there was one, would you expect it to be at a large premium, or do you think it'd be a bit of a different style bid, given it's quite a substantial company?
No, I think it'd be a much higher premium than 20% that you made mention of. 30%, I think it would even have to be more. QBE does not want to be taken over. I don't think they've been pretty agitated about this, which they should be as well. I mean, they want to extract the best price possible for their shareholders. But at the end of the day, I don't think it's a positive thing for the ASX losing a big macro play like QBE. So no, I think it'd be a very substantial takeover given the part of the cycle we're in insurance. Okay, fantastic. Thanks a lot for that update, James. Thanks for those insights. Very good. What I'd have to say is, any questions, queries, comments, feel free to email us at info@marketmatters, or give us a call on the 1300 number, 1300 301 868.